What's up everybody, Tom here with another video. Well, what a wild last 24 hours on the stock markets. We had movements up, movements down, and all around, and we still don't even know who necessarily won the US election. Things are getting close, but for now, we'll be talking about our technical analysis levels on the S&P 500, Nasdaq, dollar index, gold, and more to try to get a bit of an idea and understanding of why these big moves just came through the markets and what's going to happen next. Is this just a overreaction to the gridlock that we're seeing in US politics potentially for the next 4 years? That and more, stay tuned. So as we mentioned, the markets have been moving up and they've been roaring up. We had the Nasdaq, an absolute outperformer. We'll be taking a look at that in just a moment. But the gridlock is really the story here. More of the same for the next 4 years. Yes, it could be that Biden wins and therefore that's what we're going to see. But basically now we're talking about stimulus moving forward. And we're also talking about the gridlock between, of course, the multiple different houses in the US. We're not going to necessarily see a lot of the sweeping changes that the Democrats wanted to have, and that has reacted well for, of course, tech stocks. Microsoft, Apple, Google, Facebook, and Amazon were heavy beneficiaries of that, as were, of course, a lot of the healthcare stocks, a big concern for the market moving into potentially a Democratic candidate. So there's some of the moves, but what about just the actual indices? Well, the Nasdaq was the outperformer with a 4.41% increase, a very large move for the day. S&P 500 2.21 and the Dow Jones 1.34. Now, we've been talking a little bit on this channel about how the technology sector has really been getting beaten down for quite some time now and was really providing probably one of the best values in terms of, if we can call it value, in the markets. And that is why it was one of the standouts. But we also had a few other sectors doing really well yesterday. As we mentioned, healthcare, we've also got communications, and then the tech sector. Consumer discretionary also did pretty well, and that's because in this scenario, potentially we still are going to be talking about stimulus relatively soon. I'm still very wary of consumer discretionary. I know we're coming into a very popular time of year, Black Friday, obviously Christmas as well, but when will this stimulus get passed? They're talking about it right now, but the question is, will they get it done? Hopefully they do, but consumer discretionary remains one of those ones that I'm a little bit careful about. On the other side, utilities and materials were pretty much the laggers of the day, and that's just again due to the gridlock that we're seeing in the US. Now, regardless of whether Biden or Trump won, realistically, the stock market is still going to be set to move up. And in these cases, this just really proves, and we've mentioned this before, from 1926 to December 2019, these are all the different presidents of the United States, obviously Republican and Democrat, and how the markets have performed. So you usually want to be a perennial bull from that aspect. If we take a look at the race right now, here's a bit of an update. There's quite a few states still in counting. We've got Nevada, I think 12 noon tomorrow, they'll be releasing their result, which should give us a lot of idea whether Biden has won or not. Arizona's still tight. And then, of course, we've got Georgia, Pennsylvania, and North Carolina potentially just going to the Republicans. So Michigan and Wisconsin were the two kind of areas that really Biden had to win, or Trump. And in this case, it's very, very close. We can see they've called it here on the Bloomberg counter at 264. And if Nevada is one in Arizona, then it's all over. But it's so much conjecture here. Really, the market doesn't care so much about that now. It's just looking at gridlock, gridlock, gridlock for the next 4 years. And that usually has led to better performance in stock markets. Stock markets tend to perform better in gridlock than they do in sweeping reforms. It's a very interesting fact. It may not be good long term, but it's definitely an interesting fact that we need to think about. On to earnings quickly. We still have some big earnings coming out. We've got Square after the close, obviously Alibaba as well coming out on Thursday with their earnings. Look to those ones. If you're in Alibaba, of course, earnings are very, very important due to that Ant Group controversy. In terms of what JP Morgan and all the other guys are saying about this election and about the result, really it's just more that they're looking at gridlock, therefore buying gridlock-based shares they were concerned about before. Quick update on our Q3 beat data before we get into the technical analysis. We've got an 84% beat rate, beats 1,078 versus 207. So again, the Q3 data is showing strength in the market, and we were declining into the election, but another reason why The bulls are back in control for now, at least, because of course this beat data was pretty good, and really a lot of the concerns were over US election either way, and a whole bunch of things there. Let's go through some of our early indicators. So we've got things like copper. Copper had a nice bullish rejection there. We can see here a bull hammer coming through. If copper now continues to move up past these little wick kind of levels, that shows further strength, of course, in a corrective kind of copper movement. Copper's been strong. That leads to, of course, our idea that the stock market is also just in corrective phases, and we pretty much maintained that now for a little while. And when we look at the VIX was probably the standout, even though it looks like there was a whole bunch of volatility coming in. We talked about the VIX coiling at this level and looking for a 41 or close above that, and that would really be spiking the market down. Really what ended up happening if we go down to the smaller time frames is we just had it coiling within a range, breaking out of the range, and then moving back down into under the 30s levels. Now, does the volatility equal what we're seeing in the election? Remember, they're really just looking at it from a gridlock government regardless either way. And that is more of the same. Remember, that's what they're kind of going through. Wall Street's just thinking of it that way. And that's why we've seen volatility come back out of the market. But it could come back at any point due to stimulus concerns, and that will now become one of the big stories moving forward. When will we get the stimulus? How big it will be? And what's going to happen on the FOMC meeting as well on Thursday? Will they support the markets or not? Have a quick look at gold here. Gold's starting to kind of trap between two zones. I still think it's really important to have like a 1930. I mentioned yesterday during our live stream, and thank you so much for all the people coming out to our US election live stream special, that it was very tough to trade gold over the last 24 hours. And when we go down to the smaller time frames, you'll really see why. Let's just go down to a 1 hour quickly here. You'll notice that there's this big spike down. This actually happened in about 2 minutes. So we saw a 2-minute illiquidity kind of event where gold went as low as 1880 and then kind of retraced it, and then it did it again. This was all during the count when we started seeing the counts come through. For now, gold seems to be recovering and it's looking relatively bullish. We have had some weakness in the dollar index, which we'll be taking a look at. But I think overall, bigger time frames, we're looking at a 1930 really close above, signaling super bullish strength and intentions back up to these highs of 1970 and possibly even 2000. So if you're a really long-term gold bull, the level that you're looking for is above these 1930s. And we want to see basically price action get above, probably find some resistance, get above, come back down, test the previous two resistances as support, and then move higher. That's going to be a very strong signal for gold traders out there. Before we get into the indices, let's take a quick look at silver and dollar index as well. Silver continuing to go up here. We've got 2 wick rejections. We all know what that really means. If we get a body close above here, usually signaling back to the 24.50 and then possibly even the 25. One thing that we have seen a lot of recently is shooting stars failing. So what that means is if we have a shooting star like this, and then maybe even we have another shooting star next to it, when the market goes up and it closes a body against those shooting stars, we've seen some incredible bullish movement, because effectively what's happening is it's taking out the stop losses that were above here, and then it moves to the next zone. So always look out for this pattern. It's a bit of a tip. It's something we've been seeing a lot of on the smaller time frames, large time frames, across all instruments during this crisis. So what's happening on the US dollar? Well, the US dollar has not given us a clear direction either way. Look at this 4 hour. We had a big bull movement yesterday up to these kind of previous resistances of 94.30 area. Then we had a big sell-off as it looked like Biden was obviously in the lead after it was Trump in the lead early. And now we're in the middle of nowhere land. US dollar incredibly tough to get a direction out of it right now. If you're looking at a bigger time frame, even like a daily, I'd be looking more to the end of the week with the non-farm payrolls, and then hopefully next week we can get back into having some kind of clear direction on what this dollar is going to be doing. It's very tough in the zone it is right now. No clear direction, at least how we're seeing it right now on the US dollar. S&P 500, here's where things get interesting. Before we look at the Nasdaq and the Dow, let's talk about the S&P 500. So I've got a couple of lines drawn up here, and I've also got the monthly pivots that we've had on recently. So S&P 500, first thing, wow, look at these moves. Big gaps up, big bullish strength, followed by some selling there into the close. We had a little bit of selling off the exact highs that were reached almost at the 3,500. Now, think about this. We have the monthly R1 opened. The monthly R1 opened at around 3470. It went slightly through that and rejected that area. We've noticed that monthly pivots on the real market, the SPX, have been pretty good levels of resistance. So it makes sense for us to see some selling pressure coming off that. We've also got a bit of a trend line that we can draw through these two previous peaks as well. We've got a trend line between those two peaks. So if we did see bullish action moving forward, maybe it sells off this line, maybe that hits it around 3,500 if it takes a little while to get there, or we might see a break close above, and then the next movement on, which probably is signaling those all-time highs. Basically, if we get above this trend line, we're going to be looking at all-time highs, possibly an R2. As the election becomes more clear, we see the non-farm payroll, and we obviously hear from the FOMC. Stimulus, all of those types of things are the kind of things that will push the market to those directions. But this trend line, definitely worthwhile having on your charts. So what are we thinking about right now on this market? Well, if we go down to the smaller time frames and we think about 4-hour swing and we think about what's happening recently, the pullback back down to these two moving averages should be pretty good. So we know that when two moving averages, the 20 and the 50 exponential here, usually cross or become very close to each other, which they are very soon, that acts as what we call dynamic support. And dynamic support becomes a really good area to be looking at. It's also going to happen most likely around a 3,400. And I think it's worthwhile at these points to always draw up things like a fib retracement and to have an idea whether that area is going to make it into the 38,250 fib levels. Well, it certainly is. Look at this. We have a 38,250 fib of that last big bullish aggressive move coming back down at around the 3,400 and under, where all of that dynamic support is, the Fibonacci is, and on top of that, we've also got our original kind of zone just above it, being that 3,400 to 3,420 area. So there's a lot of big supports here now that we've closed and broken above this zone on the S&P. And I do think that we may be now in the bull run, or at least the next bull movement, but be careful over these next couple of days. We are in undecided US election. We have an FOMC statement and we have a non-farm payroll, and we don't even know what's going to happen with contesting the election yet. So it's still a lot of uncertainty in the market, but the pullback to this zone would be worthwhile dialing in onto the smaller timeframes. Onto the US 100, obviously the Nasdaq, the best performing index of the day. Similar kind of story. We're here on the 4-hour right now. You can see that the US futures are trading at about 11,836 with a high as 871. We almost reached that during the stream yesterday as well. So we got a 11,773 on the Nasdaq, and we have a whole bunch of crosses here. We have a 20, 50 exponential moving average cross, and we've got a 200 simple moving average as well, all around this 11.5 zone. So if the market's to pull back, it's again worth putting the fib on the move, thinking about the 38.2 fib pullback, thinking about the 50, and just thinking about how tough it's going to be for the market to short through this zone at least the first time. So if we see a pullback, this area is going to become very, very interesting. I'd probably be looking at the S&P 500 to give us a clear sign that the market's moving to the R2. Like we said, that trend line's worthwhile having on the charts. And the Nasdaq is just looking really, really strong right now. But that doesn't mean that tomorrow we might not see a sell-off after, Jerome Powell comes out, potentially says something, who knows. All those types of things can always cause jitters in the US markets. The other thing that we're seeing is US 30 or Dow Jones. Very, very similar setup to the other ones. We've had a pretty strong kind of movement here. Again, a lot of conjecture around this 27,500 level. If we go down even to the 1 hour, you'll see that there was a decent amount of structure through that area. And for now, if it does pull back, it's a very similar scenario to the S&P 500 and the Nasdaq. 2050 crosses on the 4-hour here, big bullish movement. Pullbacks after the big movement are not unheard of, and we usually see that 38.2 to 50 fib getting reached. So we hope you enjoyed this video today. Of course, be careful out there in the markets. This week was always going to be an incredibly difficult week to trade. It's one of those weeks that if you're placing longer term investments, sure. But if you're placing shorter term trades, it is a very difficult, volatile time to trade. And unfortunately, that often leads to your stops getting kind of hit or possibly gapping as well. One of the worst things that can happen to a trader. Good luck. We'll see you in the next video. And remember, non-farm payroll Friday. We're doing a live stream for that. So come join us and hang out with the trading community. Bye for now.